Americans For Fair Taxation presents the weekly Chairman's Report, written by Steve Hayes, president of Americans For Fair Taxation, and recorded by Bob Paxton, a volunteer with the Florida FAIRtax Educational Association. And now, this week's Chairman's Report.
Hello, I'm Bob Paxton with the AFFT Chairman's Report for Friday, June 7th, 2019. In the article Ending Special Tax Treatment for the Very Wealthy by Alexandra Thornton and Galen Hendricks, posted on Center for American Progress, the authors make the argument that the very wealthy are not paying their fair share of taxes. They advocate for increasing income tax rates and expanding the definition of income so that more of their wealth will be taxed. Some of the arguments made by the authors are: America's tax code no longer adheres to the core principle of ability to pay, the idea that taxes should be based on a person's capacity to pay them. When other sources of income are counted, like self-employment, business, capital gains, interest, and income from government programs, nearly 1/4 of U.S. income goes to the top 1% of income earners, while a mere 14% goes to the bottom half of income earners. Not only are top tax rates on ordinary income low, the wealthy accumulate capital assets which grow and aren't taxed until sold. The wealthy receive income from their capital assets, subject to a much lower 20% tax rate. Capital assets don't have to be sold to be used. The authors refer to the $10 billion line of credit negotiated by Oracle CEO Larry Ellison, secured by Oracle stock. This has been used by Ellison to make purchases free of federal income tax. The rich use their wealth to influence the U.S. political system to skew policy in their favor, including giving themselves even more tax cuts. Now here's the response from the other side, and why the existing system will not make either side happy. Now, some people reject the author's solutions to raising taxes on the wealthy and taxing more of their wealth. This side argues that increasing the requirement for higher income earners to pay more taxes will discourage the activity of these people who create jobs and opportunity. They point to the economic growth after the Reagan and Trump tax cuts. Both sides have a problem accomplishing what they advocate for, the existing income payroll tax system. At first, this seems counterintuitive. It seems that raising or lowering income tax rates is advocated by both sides. As discussed earlier, increasing taxes on the wealthy will create many problems. The changes favored by the groups wanting to tax the wealthy don't just involve higher tax rates. The wealthy can avoid those unless there's a radical change in the definition of income. Now, while this may seem simple on paper, in practice it will dramatically change the way taxes are calculated for a lot more than just the wealthy. For example, many groups, like the authors of the article and several Democrat presidential candidates, want to eliminate capital gains benefits and tax the annual increase in value of their capital assets. For example, if a person starts with assets worth $500,000, each year they would be required to revalue those assets, and if there was a gain in value of, say, 6% or $30,000, they would report that on their income tax return and pay ordinary income tax rates on it, even though they don't actually have the $30,000 in hand until and unless they sell the capital asset. Now, there are obvious problems with this proposal. First, who's going to appraise the assets and determine the amount of gain? Now, if the assets are traded securities, that's easy. You have a liquidation value in January and a liquidation value on December 31st. And if it's higher in December, then that's the amount of income you add to your personal return. However, what if the assets are not publicly traded, like a small business? Who does the valuation then? If each of us comes up with a value and the IRS challenges that amount, which it will certainly happen, how's it going to be resolved? Does it go to court to be disputed for years, or are we just required to accept the IRS valuation? The way the income payroll taxes have historically been applied, they start off only affecting the higher income groups, or in this case, the higher wealth groups, but they have always crept down to where they continue to affect lower and lower income and wealth groups. We can anticipate the definition of wealthy will continue to be lowered and affect more and more the middle class. The annual increase in the value of our home, the largest investment many of us have, will be affected by this plan, and the gain in value will be added to our taxable income each year, again, even if you don't sell the house and don't actually have the actual money in hand. When the definition of wealth starts to be reduced to people who have assets of $200,000, for example, the following story might start to apply for many of us who want to tax the rich. Huey Long, the populist governor and U.S. Senator from Louisiana, was campaigning one year, and he said, "If a person has 2 homes, we will take one of those homes and give it to a family who doesn't have a home." The audience applauded wildly. Then he said, "If a person has 2 cars, we will take one and give it to a family who doesn't have a car." And again, the audience applauded. He continued, "If a person has 2 hogs, we will take one and give it to a family who doesn't have a hog." At that point, most of the audience was silent. Then a man wearing overalls yelled out, "Huey, that ain't right. I got 2 hogs." Another problem for all of us making decisions which affect us for many years is that any change to the income payroll tax system can be changed again with each new Congress or administration. This means there will always be uncertainty that the decision of the swamp and their allies in Congress today will stay the same tomorrow. This makes it very difficult for all of us to make investment decisions and basic decisions like whether to purchase or to rent a home. So why is the fair tax the answer? The fair tax takes the position that the purpose of the tax system is to collect money for the government in the easiest and most efficient manner possible with the least disruption to the parties paying the tax. Instead of adding complexity, the fair tax will actually satisfy both sides of this argument. For the people who object to the wealthy being able to live lives of splendor without paying their fair share of taxes, unlike today, under the fair tax, these people will pay every time they spend their money. Because people with more money spend so much more than lower income people, the rich will obviously pay much more with the fair tax. For those who believe that it's fair to remove restraints on production by not taxing earnings and investment income, there will be no punishment for hard work and savings because the fair tax is only levied on sales of new goods and retail services. Because of the prebate or tax credit, lower income taxpayers will be untaxed and the resulting lower retail prices will benefit everyone. By removing the financial subsidies for imports and punishment for U.S. exports existing under the present income payroll tax system, more and more high-paying jobs will be created in the United States. More jobs means workers are more valuable and scarcer, and companies will have to pay more to hire and retain good workers. The economy will grow much faster, more money will be spent, and revenues to D.C. will grow much faster. Increased revenues will allow Congress to create more programs benefiting needy Americans. And all of these gains will not require more complication, but instead will introduce greater simplicity into all of our lives. With a fair tax, Congress in the swamp can no longer sell income payroll tax benefits to the highest bidder. In conclusion, of course, many in Washington are eager to see a major fight about fairness. They plan to take as much money as they can from all sides for as long as they can. Then the side that offers the most will win. But then the Washington swamp will ensure the losers that they know with even more money, the issue can eventually be resolved in their favor. Now, isn't it time to reject the interests of the swamp and their allies in Congress who only want to benefit themselves? People say it's not going to change. And it won't if we wait on the swamp and their allies in Congress. We will have to force this change by demanding it.
This has been the Weekly Chairman's Report, written by Steve Hayes, President of Americans for Fair Taxation. Check back every week for news and information about the fair tax, and learn why the fair tax should replace our antiquated federal income tax system. If you'd like to receive a copy of the Chairman's Report in your inbox every week, sign up at fairtax.org or bigsolution.org.